Let's start today with what's happening in payments. There's a lot of discussion about the need for payment modernization and the ability to upgrade our current systems. What we're looking for are holistic experiences that provide immediacy, that provide convenience, and that bring insights through a lot of data moving along with every transaction. So let's dig into that modernization a bit and see if we can't understand what's happening with the industry. Charles, maybe you can give us a general overview. What's happening and how did we get where we are?
Yeah, George, this week marks my 40th anniversary in working in payments, and a lot has changed since 1981. My first exposure to the recent payments modernization effort started a little over 6 years ago when I first heard about the activities that were being coordinated by the Federal Reserve. I learned the Federal Reserve was starting a task force, the Faster Payments Task Force, and I conveyed that information to our senior management team, and we immediately recognized the importance of representing credit unions. And with that, I was encouraged to join the group. I can say that from the start, Faster Payments Task Force was very different from any other forum, with over 300 participants from a wide range of industries beyond the traditional payments provider groups, including retailers such as Walmart, insurance companies, including Nationwide, consumer groups, and many more industries interested in the future of payments. So this was a huge milestone for payments modernization by bringing together stakeholders from a much broader payments industry base. It was a turning point. As the work of the Faster Payments Task Force evolved, it became apparent just how far the US was behind a large number of countries in deploying technologies to improve payment efficiencies and reduce risk. But in reviewing the progress made by other countries, we recognized that the US was faced with unique challenges as a result of the sheer number of financial institutions, corporate offices, and retailers versus other countries. So at a high level, the need to bring the US to a level playing field in terms of technology adoption was and still is an important driver in change. As we speak about existing systems, it's important to understand that we've created a very large payments infrastructure. It's built on legacy platforms, which present some challenges in moving forward. As we attempt to apply new digital user experiences, we're challenged with the connectivity to and the limited capabilities of existing legacy systems. So in most cases, this requires another level of technology to make these systems interact. I would also say that an equally important driver in payments modernization is the expectation of consumers as they experience huge leaps in the application of digital technology. These expectations are often created by new technology players in payments that we now refer to as Fintechs. And while the term Fintech might be relatively new, card processors such as Visa and MasterCard were really early Fintech companies. While it's true that MasterCard is one of the top worldwide labels for credit, debit, and prepaid cards, MasterCard doesn't think of itself as a card company. They consider themselves as a technology company in the payments industry. And it's the availability and application of technology that's driving the change.
So, Charles, that's fantastic. There's a lot of effort that's going on with technology companies. Obviously, from an industry perspective, we're looking at legacy solutions. Keith, maybe you can go on a little bit about technology and technology companies and what's happening there that's influencing payments.
Yeah, thanks, George. So as Charles mentioned, the impact of fintech has been substantial across the globe. Recent studies from Deloitte and Touche basically have stated that 75% of the consumers across the globe have used a fintech solution, and typically that's centered around money movement technology. And you also touched on one aspect in terms of user experience, and what these platforms have done have created very elegant user experiences that build in the immediacy, the simplicity, and the transparency as part of that overall offering. And I'll give one great example that is not certainly a Visa or MasterCard, but probably well known in terms of money movement, and that's PayPal. So PayPal has now amassed over 377 million consumers who use their platform for money movement purposes. And they have a very simplistic and elegant user design that also infuses another company they purchased called Venmo, which is for a different demographic that really focused on the millennials and their money movement needs. So now they have this vast amount of money movement functionality within a wallet that basically includes functionality designed for a specific demographic. So I think all those things taken together, the fintech environment, and that's just one example, that can provide a aspect of how these platforms are expanding in functionality, delivering simplicity, providing immediacy, which PayPal has already done and connected into more immediacy for network access and money movement, and given the ultimate experience to those consumers that use that application, George.
Thank you, Keith. A great point on expectations. We have consumers and their expectations. Right now, they have a lot of digital experiences that they use, and we can see PayPal has looked at not only the normal money movement, but with Venmo looking at more millennials and how they're working. Toby, maybe you can expand a bit on that and expectations, and what does that mean for credit unions?
Sure, George. The expectation has always been moving towards faster and more immediate. Take, for example, today's transactions that you may do on an everyday basis. You may order a product online in the morning and have it delivered to your front porch that afternoon. You can order a meal for your entire family and have it arrive at your home within minutes. You want to know the answer to an obscure question, just ask your watch. You'll have the answer in seconds. So the members, it's getting harder for the credit unions to impress their members with transactions that don't happen immediately or even settle immediately. Members are seeing what's possible. They're seeing what's possible in the market. They're seeing what's possible around the globe. Faster payments and immediate type of payment systems have been around for quite a while. And these members have been able to see and even do their own transactions with these types of payments. So their expectations of getting things now, they want to see the debits and the credits posted to their accounts right now. They don't want to wait till later that afternoon or that night or even the next day. Even most recently, ACH, for example, took a couple of days for the member to have access to their money. Checks was 4 or 5, could be up to 10 days before they deposited that check and got their availability of the cash. So in today's world, they could have someone send them money, turn around and withdraw it right from the ATM. So that expectation is there, it's real, and they want it now.
Yeah, thanks, Toby. I think that clearly we're seeing that we're at a tipping point with payments and payment delivery. So let's turn this question over to real-time payments and how they impact how we're bringing payments and payments modernization. It's a critical component, but let's talk about how we make that happen. Charles, maybe we could start with you.
It's really important that all credit unions and all financial institutions participate in real-time payments. I can't emphasize how important that is. We need to achieve ubiquity where every business, every consumer can reach every financial institution. And that's what will make the system work effectively. Some credit unions may want to start with receive only, and that's okay. That's a critical first step in creating the needed level of system reach. But achieving ubiquity also requires collaboration between payments providers. And we're starting to see that industry collaboration begin to take place. The Faster Payments Council has been a great organization in terms of bringing the industry together and identify the challenges and foster collaboration. So we have to remove the delays in processing and settlement and reduce risk in payment systems. And it's especially true for checks or share drafts. Having worked in checks for a long time, I feel a personal attachment for the check payment rail, but it has to be retired. And even with the implementation of image processing and transmissions, the whole process is slow, creates too many opportunities for fraud and settlement risk. And RTP is the complete payment solution to improve payment times while reducing that potential fraud and settlement risk. In terms of credit push or send capabilities, you have to begin to understand the expectation of your members. Consumers want to be able to make payments immediately to match the experiences they have with other technology services. If you don't have a solution for your members, there are many other options available. There's a lot of competition in this space, and an increasing number of financial institutions are rapidly deploying real-time payment solutions. Once these members start to use other options, it's possible that they'll adopt additional services offered by fintech providers and even move their accounts to another institution. Recent surveys that we've seen support this statement with statistics that a large percentage of members will move their accounts to realize the benefits of immediate payments.
Yeah, so we've seen some of that with PayPal and Venmo, that the payments are shifting and moving. So one of the important aspects that you talked about was settlement. And Toby, maybe you could talk about immediacy and how RTP brings immediacy to settlement.
Sure, yeah, the real-time payment network does a really good job of eliminating settlement risk. Settlement risk is very present in almost all forms of payments, and the credit unions are well aware of this. But the model that the clearinghouse has put together for the real-time payments eliminates that settlement risk. It doesn't eliminate fraud in the broader sense, but it does eliminate the settlement risk. They have a credit push model where funds need to be verified before they are even sent. So if, for example, a business was sending money to another business in a B2B transaction, that money that the sender has to be available and in their account before it's even sent. And it settles immediately as well. And so the recipient understands that once they receive that notification that they've received that payment, it is final and the money is good. So it's a good funds model as well. So both parties in that transaction can feel confident that the money is there, the transaction is settled, and they can move on with their business.
Thanks, Toby. So the need for speed is really important. We talked about settlement, the need for speed for settlement. Keith, what about the network? What do we have to know about that?
I think when credit unions are evaluating potential involvement in the network, they can look at existing activities and existing transactions to make some determinations about the impact of where these disruptors that we've referenced may be infiltrating their member base. So they can look at ACH activity and look at PayPal and Venmo for any type of wallet funding that's been done. You can look at immediate payroll that may be pushed in from certain companies that are generating transactions into the credit union that may be, that they would look at as a potential opportunity. So where are those payroll opportunities coming in ACH today? Where are those PayPal and Venmo transactions coming in ACH today, and other disruptors, to make the determination, would you want to start participating in certain models like Receive, like Charles has mentioned, or move to something like Send Receive? It's a little more progressive and bring in your parties to do so. So it's understanding the existing data to make a determination on what they may want to do. Beyond that, they certainly need to educate all of those within the organization as to the impact of those models. So I think if you understand where you are today, make a determination as to who you're going to develop as your enterprise planning team, those can take an opportunity to make an evaluation on when and how you'd participate in the network.
Thanks, Keith. I think that clearly shows us that the demand for real-time payments is there. There's a number of use cases we're going to have to be taking a look at. And real-time is really going to provide the right access and the right methods for us to get there. Thank you.